Thank you everyone for thank you for joining our talk show. Today I'm proud to introduce Evelyn. And Evelyn is a practitioner of Chinese astrology, and some of her forecasts which she has shared with me quite some time ago has also fallen in line with the global trends that I have also forecasted, and there are some similarities in it. And as we discuss deeper, that we realize that there are certain intertwining of the two that will allow investors to have a wider horizon of what is about to come in the near future, not necessarily immediately, but over a period of time. So maybe Evelyn, you'd like to introduce more about yourself?
Okay, yeah, sure. So today, just a little bit about myself. Actually, I'm an engineering professional, but I have a passion in Chinese astrology, and I do some consultation in Chinese astrology, life energy for people. Besides, I'm a creator of 7 essentials. I'm into supply quality management. If some of you are in, a manufacturing line, you have know what is it. I write books, I design courses, and I'm also a consultant. I've been in the corporate world for the past 30 years, and I'm generally a very logical people. As people say, engineers are really very logical. I solve problems all my life, and I have used multiple tools, which includes Chinese astrology in my career also, later part of my career to solve it. I really wish that I could have learned this Chinese metaphysics skills earlier on, and it has helped me a lot in later part of my career to solve those very difficult, problem. If you are in the corporate world, in the manufacturing world, you will know what I mean, that what are the challenges we have. So these are the books I've written mostly on my skills in quality engineering, supplier quality management, and also some of these Chinese metaphysics, and taking my skills of sharing my corporate world journey and beyond also with people. One of these books, The Corporate World and Beyond. Okay, so this is just about me. We would like to go through the disclaimer page. Everyone can see the slides, right? Okay, so the disclaimer page is that this content here that we are presenting today is based on our study in the global trend in relation to the 5 elements Chinese astrology. The global trend, layer it with the 5 elements Chinese astrology for you to use as a guideline to make a better investment decision. Because I think the macro economy is sometimes quite unpredictable, where we can want to apply as much tools into it to sort of better eliminate maybe some of the noise from the signal and for a better prediction. It will not be 100% accurate. Okay, this one I need to make a disclaimer here. Then you have to also exercise your caution in investment, especially in such volatile situation. And always end up in doing your own research in the company before you want to invest. Even from my personal experience, I know about Chinese metaphysics. Formerly, I did not know about all this research until, I start to join some of these groups, some of this investment group where they do a very well, company research in a very thorough way. And I only layer with the Chinese metaphysics, then only, chances of me getting a profit or making a right choice in investment is very much higher. It does not really rely on one thing only. And also, because we are not professional financial advisor, no stock advice which stock to buy will be given. Maybe we can give you a snapshot of what sector would be the future trend, but not the actual which stocks advice. Okay, so anything to add on, PC?
Nope. I think for the first half of the session, I leave it up to you.
I do not know how many of you, let me just launch a poll questions. I just wanted to do a poll before I start. Would you do a research on your current and future investment? Can you just type in a yes or a no in the chat box? We have one that, okay, yeah. How about the Would you do a research? Okay. How about the rest? It seems that all is like 50-50. Only one of three. Yeah, that's right. Yeah. Okay, never mind. The reason why I asked, okay, good. We have participants that really do a research on the future, current and future trend before they investing. This is the correct way of investment. If you want to have a better control on your investment, not on speculations. So I think we can sort of end the poll. Good morning, everyone. So what we will do is that we shall go through the 5 elements astrology studies, how it related to the global outlooks, why these two can be, correlated to each other. Because I think maybe most of y'all does not have much of exposure into this ancient art of Chinese astrology or Chinese metaphysics, as some masters has termed it. Okay, so let's go through because in Chinese we always believe that there are 5 elements, and these 5 elements are wood, earth, fire, metal, and also water. And where does all these 5 elements comes from? The ancient masters don't plug all these 5 elements just from the air. What they do is that in the past, people are very free. What they do is that they will study all the movement of the planets. And why 5 elements? The 5 elements are actually the 5 movements of all these planets, which is Jupiter, Saturn, Mars, Venus, and Mercury. And each of them, they will have a certain energy in the orbit which influence the Earth, and the energy will give a different type of results. For example, like woods, it represents growth. Okay, and then earth, it will represent stability. Fire will represent happiness and passions. And matter, it will represent execution, altruism, and also water, it means that movement and wisdom. So what they do is all these ancient sages, they record down the path of all these planets. And in the past, they do not call it planets because there's no term for planets more than 2,000 plus years ago. What they call is only star in the sky because they are all shining objects in the sky. And from there, they will, record down the movement of planets together with the happenings that is happening around them. And this is how they will also give advice to the ruler of that time. Because last time, no internet, no this one, no news, no this one. So roughly, they will know that, where will the disasters happen in certain parts of China. And the king will, send troops, get ready, all this to this one. So basically, it was already used for geopolitical studies in the past. Okay, and of course, all these 5 elements also can also use it on the personal basis, like destiny analysis, if you heard of it, because of the energy of you, the time you are born, you have already pulled in the energy from the moment itself. What they do is that they will translate, they have the ability to translate a date, like here, this is a date, right? Here, this is a date, like 4th of February 2022, time is 4:52 a.m. And this is actually, we term it as Li Chun, arrival of spring, because I think y'all know, if y'all are followers of like feng shui and also Chinese astrology talk and the annual talk on, on those animal signs and all this, we will probably have heard of Li Chun. If you have not heard of it, you will heard of people queuing up long line in the ATM machine or in the bank, try to deposit money on that special day itself, usually on the 4th of February, because this is the arrival of spring, this is a change of new year. And the feng shui masters will use this day actually to predict the upcoming year, because this is the first day of the new spring for the year itself. And what they do is that 4th of February 2022, 4:52 p.m., they will translate it into the pillar. 2022 is a pillar of the year. Like this year is a tiger year, right? I'm sure everyone knows this year is a tiger year, right? And also from here, they will translate into an energy pillar here. This is one energy, the 5 elements energy. Within this is consists of water and wood. And then even February itself, is also translated into another pillar, which is the water and also tiger itself. And the day, what is the day? And also this is the red day. That means this is the time of transitioning. And this energy itself, you can see all the 5 elements energy here already. Here, can you tell me that which of the energy is the most prominent here? You can see all the woods, the water. So can you just type in the chat box and tell me, now you can read the chart already. It's very simple. I just teach you how to, translate this. And all these things, the translation, actually, you can use a 10,000 year calendar. There's a cyclic calendar. There it will tell you each month, even this moment here that I'm talking to you, there's also a 4 pillar like this. Okay, so from here, my dear friends, can you tell me that which energy of these 5 elements is the most prominent? Anyone? Just give me a feedback in the chat. Either wood or water or earth or metal. Yeah, that's right, William. Thanks for your feedback. So wood is very prominent because you can see. Oh yes, that's right. Yeah, a lot of people. Yes, now you are very good already. So you can see 1, 2, 3, 4 because I translate into a graphic format. This is my own format. You cannot find this translation in the you can find these 4 pillars, but the graphics is my own creation. Okay, so yes, it's wood. Correct. Very good. Bravo. Okay, so yeah. Okay, so now you understand already. Next is so this is what influenced the outlook for the year itself. Once you know already, it will be what are the elements that is prominent in the chart itself for the year, for the Li Chun, the transition to the spring, and also the interaction of the 5 elements. There are 2 layers here that governs the whole charts. Okay, this is how the chart is being read. I explained to you the fundamentals, why it makes sense, why in a way that it has certain scientific meaning to it. So you can see that wood itself is the most prominent energy. And secondly, is actually water. You can see a lot of water here also. Earth is not so much. That's why you can see that is property doing well this year? Is property very prominent? Normally, that element has not so many in the chart one. Normally, they will not either receive a lot of attention or they will not be very prominent either way. Okay,
Yeah,
so
I would like to add on that right now in the US, it is a lot of economists are forecasting a housing crisis. Just yesterday's data showed that there is the highest cancellation of pending home sales since March 2020. And in China, the housing market since last year to this year has collapsed about 20 to 30%. Okay, so it not only affect just maybe some of you with Malaysian experience, but also it's getting more and more prominent. And the statistics from the US is pointing towards a housing crisis. Yeah, Evelyn.
Okay, yeah, that's right. And also, another prominent element which you cannot see, and normally we don't regard that prominent element because earthly branch, there is a lot of hidden stems one. Also inside got elements one, got 5 elements which I did not show here. But actually, because there are 3 woods. If you see in the earthly stem, which is hidden one, 1, 2, 3 across the pillar. That means that shows that the element is quite prominent, which is actually fire side. The tiger. Those that knows a bit of Chinese metaphysics will know what I mean, because there will be fire here, fire here. So that's why there's also some energy related crisis or either any energy related kind of attention. That means the energy sector will also receive some attention. This, I think PC can also support that also later on the energy crisis and all these things.
Yeah.
So all these with the elements, they will represent a certain sector that will do well in this year. or will receive attention. They will either do well, they will either receive some attention or become very prominent that people suddenly look at it. These three things, not necessarily that only one path. There are a couple of options here, A, B, C, one. So whether they will do well, all this will depend on the interaction. That will be, a deeper reading already. So what happened is that you can see even this chart itself shows that there's no metal here. In a deeper sense, because just now I say that this one will depends on the interaction, because the day itself is our focal point. Any chart when you read, day is always the focal point, especially the heavenly stamp. So you can see because Earth create metal, so there is no actually productivity. In another words, that is the meaning of it. This one is very simple to read because this signal is very clear. Normally, some charts, they're not that easy to read because the signal is not clear. This one is very straightforward, okay? So that is why we can really read that there's no this one. So out of all this, with the wood, from here, we already know that wood represents agriculture generally. My YouTube channel has a talk on all these 5 elements, what industries that represent or what economic activities. Later on, I will give you the link and you can go into it and check out the YouTube video later on. And then water represents, something related to logistic, fast-moving consumer goods and all these things. So in terms of 5 elements and agriculture, that is, here means that wood agriculture sector will receive attention. Okay, it also represents clothing, and wood also represent growth. It also actually represent clothing and fashion, and also education.
Yes. Type your questions in the chat box rather than use the mic, because rather than use the audio, because sometimes the noise level we cannot hear the questions too clearly also. So don't mind if you can type your question in the chat box if you have any.
So generally, you already got the outlook that what is the 5 elements energy in Chinese astrology, and also how do you translate it into a time pattern, into a year, month, and day, hour chart, and then you can use it as a transition point to predict the economy of the year. So the next one we want to go to is that itself here, that we will look at the prominent energy. We already looked at it, the wood, the water, and also the fire. Fire could be energy, could be technology. And also besides that, we also look at another layer, which I also look at is in I Ching about fellowship as well. So this year, people are very, they wanted to build their own tribes. They have seen, like influencer and all this, they are building their own tribe. It's all about fellowship as well. So the I Ching words of wisdom for the year is fellowship is very important. This is how we, look at all these things here. Okay. Next is the wood, education, agriculture, logistic. I think logistics also receive a lot of attention this year, right? Some are doing very well. Some, they receive a lot of attention due to, I think, the logistic or shipment of goods. The sea freight is not moving. And also in terms of energy, technology, or either, this one is more towards, I look at it more towards energy itself, that also will receive a lot of attention. Probably it could be, an energy crisis coming up. Okay.
I think with regards to logistic, it's going to get much worse. In fact, the National Union for the Railway Workers in the US, they are now in a period of cooling off with their employers, and that cooling off period will lapse into midnight of July 18. If let's say there's no arbitrage between both the employers and the union, then it will be a nationwide strike in the US railroad system. And that means that the shipment of goods across trans-US is going to be halted via railroads. And that would mean even less food and essentials being transported across cities in the US. And concurrently, recently, the UK also have another railroad workers strike. And right now, as Shanghai port has loosened out, the ships are now moving to other areas. In the port of Los Angeles, there's now another traffic jam building up. So which means more ships are being, more ships needed to wait outside offshore the port, waiting to be unloaded or loaded onto the ships. So this is the shipping and logistic problem is looking set to persist for quite a long time.
Okay, thanks. Thanks for explanation. When I collaborated with BC, then we sort of layer this together. I find that everything makes sense and fall into places also. This is what my section on the explanation to build your foundation on how does Chinese astrology is correlated to the global finance and the geopolitical trend that we are looking now at it, that we are experiencing now. Actually, this is a really very crazy year. And actually, we are also transitioning into new period, which we'll talk about in the future. BC, over to you to talk about the global financial and geopolitical trend.
Yep. Let's talk about the worsening geopolitical situation. Now, I believe that the Russia and Ukraine war will likely stretch through the winter. In fact, Russia is going to teach the EU a very nasty lesson because they have confiscated almost 50% of Russia's foreign reserves. And Russia, many strategists believe Russia is going to move on to connect the Donbas region to the Transnistria region, which is next to Moldova. That means securing the southern side of Ukraine, which has the prize city of Odessa. Now, Odessa and Mariupol actually contributed 50% of global neon gas production, and Russia contributes the other 30%. So neon gas is very important because it is needed by the EUVs in order to manufacture the high-end microchips. So if let's say Russia secured Odessa, that means that there won't be enough because Russia will be sanctioned anyway. So Mariupol and Odessa already stopped production of neon gas. That means that the semiconductor manufacturing is going to take a hit. Okay, and when that is done, the entire Ukraine will be landlocked. Okay, and Ukraine state would have lost all its productive resources, which is in the Donbas and the agricultural side of its economy. Okay, which is its Donbas, east and southern Ukraine. So that itself would, because the European Union and NATO and all these countries have entered too deep into it, they are unwilling to negotiate peace. In fact, they continue to send money to Ukraine to prolong the war because they want to weaken Russia. Their objective is actually to weaken Russia so that the Russia will come begging to the European Union and the US so that eventually they will invest in their resources and, at a very, very cheap rate, taking over Russia giant companies. So that's why they wanted the sanctions. The reason why they want to hurt Russia to the most is that they can secure Russia resources when Russia come begging, but actually Russia overturned the table on them. So that's why Russia is going to teach the EU a very serious lesson, which I think they would prolong the war through the winter to secure Odessa. So then the European Union will have to think whether they want to continue funding Ukraine, which has become a landlocked piece of land without the economic resources to repay the debt that Ukraine will owe the EU, which then will cause the EU and US to bleed because they already contributed so many billions to support Ukraine. So that is the end game. Now, there's also, of course, tension in the South and East China Sea will worsen due to NATO's involvement in the area. Right now, there's NATO plus, the Quad, the AUKUS, so many, military alliances to contain China. Now, the reason why they want to contain China is that China is going to surpass the US as the world's largest economy on a nominal standpoint by 2028. And that is why you see the US is sending a lot of senators selling weapons to Taiwan, because they want to push Taiwan to declare independence.
Yeah.
Because if, let's say, when that happens, then they would be able to seize China's asset globally, like what they did to Russia. And China's asset globally is estimated to be 50 trillion. Okay, so that is the intention. They want to create something to be able to confiscate all the money, because the entire European Union and the Japan, which is also wanting to get involved in Taiwan, and the US, their debt to GDP is so much higher, okay, than China's. So that is why they want to seize their asset to replenish their coffers. So it's just another method of colonizing, only that now it's done economically. And that's why I think tension in Southeast Asia, South and East China Seas were actually going to worsen. And of course, that's, yeah.
You go ahead. Yeah, I have something to add also. Okay, because from the point of the war, it will not end that soon also. That's very true, because from the year of the child, and fire is also quite strong this year, as I already pointed out. So fire also could mean military wars and all these things. So it's the same thing that here. But however, I don't think the collapse of China and Russia will happen, because they will be in the prominent region of growth for the next 20 years. The rules of Southeast Asia applies in the next 20 years, which is a transition into the new eras.
Yeah, and I think that is why Russia and China are working on a plan to start their own BRICS financial money, their BRICS monetary system, so that it allows them to break away from the US dollar. And the moment they encourage more countries to break away from the US dollar, then the US dollar hegemony will be at risk. That is because the European Union and US, they constitute only 777 million people, but the BRICS nation constitute the 3.2 billion people, 40% of global population, and 25% of the global economy. So once the BRICS insulate itself from the US dollar, that means that all the US dollar that has ever been sent overseas will come back to the US, and that will cause hyperinflation in the US. So that is why I think we are now seeing a multi-level war being fought, not a kinetic war, but economically as well as financially. Yeah. So then, of course, there's the potential escalation in Syria and Turkey incursion in the north. Turkey is actually playing both sides. Okay, wanted to be nice to Russia, but also wanting to get rid of the Kurdish terrorists that often harass its southern border. So Syria will continue to be a reason for multi-countries involvement, because Israel is right now bombing Syria. Turkey is attacking the Kurdish in the north, and US is securing the northeastern oil region, okay, so that they can funnel the oil into Iraq to process. So it's like actually stealing Syria's resources. So that's why Syria could be the flashpoint, and if not, it could also be Turkey. It could also be Iran, which is also at risk of attack from Israel. Yeah, so Middle East may be on a third level type of situation, but the biggest one will be the Russia-Ukraine war and South China Sea. And the Ukraine war, why supporting Ukraine, where the EU and US is concerned, is just to weaken Russia. When they carve out Russia, the eventual prize is actually China. They want to push China back to the Mao era, okay, because they see that they cannot allow China to rise because it will supersede all their expectations. Okay, so
it will never happen.
This is the this is the end game. So
Yeah.
the other thing is that the worsening economic situation. US will likely see a recession. Q1 GDP is at 1.6%. Q2 GDP is now forecast at being negative as well. Previously, when I was doing this slide, it was 2.1%. Now it's reversed to 1.2%. Okay, the latest update. But anyway, it's still negative. So technically, and I think the GDP will be much worse, definitely, because consumer sentiment has now reached record low in June. Okay, that means June spending is going to be very badly hit, and consumption constitutes 70% of the US economy. The other thing is that the business optimism, small business optimism has fallen to record low also in the month. I think when they did the research was in the month of July. So that means that Q3 is not going to be pretty as well. So the EU and Japan will likely slide into recession after EU's inflation spiked 8.8% year on year and Japan's inflation spiked 2.5% year on year. Well, 2.5% may seem very little compared to the Europe inflation, but if you look at it, Japan has been in a deflation. So right now, from deflation into inflation, it signifies something is very wrong, okay, in the Japanese economy, because due to the erosion of the value in the yen. So energy crisis assailing the US, EU, and Japan will ensure that inflation remains high, especially if the Russia-Ukraine war extends into the winter. Now, the energy crisis, people say that, hey, you know, once it goes into recession, the price of oil will actually go down. Yes, it's quite possible. But what people fail to understand is that inflation is not caused by the war in Ukraine. Inflation is due to the expansion of money supply since 2008, which the balance sheet of the combined major banks have increased by some 30 trillion. Okay, so that is what caused the expansion of the inflation was the expansion of money supply. And that expansion of money supply will have to play into the economy no matter what. Okay, so they might bring inflation, you know, the Fed intends to hike to 3.5%. Okay, then they expect the inflation would come down because of a deflation impact. But this is the same thing that happened in the 1970s. In the 1970s, after the US brought itself out of the backing by gold, there was an immediate inflation. Then the Fed came in, okay, raised interest rate, inflation was brought back down to 5%. But US had a recession from 1974 to 1976, of which then the Fed started easing, and from 1976 to 1980, inflation spiked to 13%. So that time, the Paul Volcker from the Fed has the ability to raise interest rate from 18 to 20% to bring the inflation down back to more sustainable level. But right now, with the US debt to GDP at 30 trillion, a 20% interest rate, okay, would mean 6 trillion, more than what the US take in as tax revenue of 4.5 trillion. And even if they raise it to 10% to beat the 8.6% inflation, that would entail 3 trillion in the debt payment. And that would constitute 75% of its tax revenue. So there is no way, okay, that the US will be able to pay that kind of interest with such high interest rate. And therefore, the situation will continue to deteriorate, the Fed unable to raise interest rate to fight inflation, and they eventually will allow the dollar to weaken because of recession. If they continue to hike into the recession, it will cause a depression. And that depression will ensure that the US economy will take decades to recover. During the 1930s, 1929, in fact, the Great Depression started, and it took the US until 1955 before it reached back the same level where the Dow Industrial Index is concerned as 1929. So it took about 23 years. So that's why the US cannot afford depression. Now the EU is warning of a need to ration energy, and the UN is expecting a global food crisis to come as early as summer. And in fact, we already see it in Sri Lanka. People are without food, without energy. China's growth is expected to be tepid due to ongoing bouts of lockdown. So this is telling you the economic story already. Now, EU need to ration energy means the EU industrialization, especially a powerhouse industry like Germany, is going to suffer. In fact, Germany's business optimism, I think, fell into decades low. Okay, so sometimes, people wonder whether was the US intention to destroy Russia by implementing the sanction, or intention was to destroy the EU economy, okay, by pushing EU to sanction Russia. Because if we look at it in terms of foreign currency reserves, next to the US, the majority of reserve held as foreign currency is actually the euro. So if, let's say, US destroy the EU and the euro, means the US will have no close competitor. Okay, so this is a question, of course. You can look at it both ways, but it's due to all the basically, I think it's the idiots running the EU Parliament, okay, which are actually members that are selected and not elected, okay, and all of them has a very biasness towards Russia. So here we can see that stagflation is, and this is the chart by the forecast, okay, by the World Bank, the IMF, okay, that inflation will continue to rise and growth will continue to fall, and that is a stagflation. So central banks are likely to lose their battle against inflation as governments teeter on the edge of insolvency, leading to a reversal in monetary policy, thus making inflation much worse. And in fact, the ECB was saying, hey, we are going to do QT. Then when they look at the yield from the Italian bonds here, hitting 600% higher, then they say we also have to look at the fragmentation of the EU, and therefore we need to support the southern peripheral countries. So it's like, they want to do QT on the rich country, but on the poor country, they want to do QE. So that is going to cause a lot of people from the rich country very, very angry towards the ECB, because how can they be financing the much weaker countries when their economy is really in the doldrums? And that is why stagflation will persist. Now, let's look at the worsening financial situation. So the Fed total assets have increased to 36.3, okay, as a percent of the nominal GDP. The ECB is even worse at 67.4, and BOJ is the worst one, 134. Now, PBOC, the People's Bank of China, is actually, you can see the downtrend line. They know the financial risk, and therefore they want to start cutting before they're exposed to higher risk. But the BOJ has actually gone nuts, okay? Now, the sheer debt which the Fed, ECB, and BOJ have monetized make it difficult for respective central banks to tighten monetary policy. Total global debt to GDP now stands at 305 trillion or 351% of global GDP. There is no way that this amount of debt will be unwound. A recession in the US, EU, and Japan will push global GDP down and worsen the debt to GDP ratio. So, in fact, everyone is baking in a recession, okay? And that is why you see the yields inversion, the 2-year versus the 10-year yield inversion, that every time it reached a negative level has predicted a recession ahead. So I think the most at risk will be the EU and Japan due to structural failure in their respective financial system. You can see that the euro has fallen. In fact, this was done a few days ago. Just yesterday, it has fallen slightly below parity, which means it has fallen below $1. per euro. And then the Japanese yen is no longer at 135, it's at 137. So as I mentioned, EU could face fragmentization, which means the destruction of the EU, and Japan risks entering into an economic disaster. So if the BOJ refuses to increase interest rate, then the Japanese yen will continue to weaken, and as it weakens, inflation will become higher. Now, some economists are predicting a hyperinflation in Japan, okay, unless the BOJ steps in and increase interest rate to help the Japanese yen, gain in value versus the US dollar. Otherwise, it will be runaway inflation in Japan. And that is why how we see it is still going to be an economic disaster. If they hike interest rate, then the Japanese government can become insolvent, okay, because of too much debt. And if, let's say, they don't hike interest rate, then the Japanese economy will suffer inflation. Very much like the US, okay? It's all this is because of almost more than a decade of money printing by the major central banks. Okay, so Evelyn, you want to touch on the your segment?
Yes, that's right. Okay, so we will do a summary. There's a lot to digest, so I will just do a summary. Generally, I just wanted to say that, what PC has predicted is aligned to what the trend is here. And I can tell you that the worst has yet to come. Okay, the worst has yet to come. And this is not the worst yet. There might be a major reset also to set us into a new era, which we will follow up with another talk if there's enough interest. So here, generally, I just want to summarize that the sector that will receive attention is agriculture, logistics, maybe energy and technology. And we will also expect the global financial changes, because the element of water, there's a lot of water there. And they're exposed because water for this year in the chart, it means the wealth energy, okay, for the global. So there will be a lot of financial changes expected also from the outlook of year 2020. So, and there will not be much of a, there will be low productivity, no output, as just I say the chart, no metal. So no metal in terms of 5 elements means that no output. So you can see production has been cut down due to a lot of reasons. And people will also be, more towards building fellowship in a lot of this. So I think in the government itself also, they are trying to have their own G8, right? Like PC has told me that these are all like, a new kind of a fellowship. Okay, so I think PC, over to you for your summary section.
Yeah, so I think although the commodities have fallen somewhat, it is due to the expectation of the market that the Federal Reserve would be able to tame inflation. But if you look at it, if we want to measure the commodities in terms of euro and yen, they are actually still at very high levels, okay, because of the weakening currency value. So in US dollar, yes, it has come down somewhat, but that is based on the market expectation that the Federal Reserve would be able to tame inflation, causing a slight deflation. But it's no longer a slight deflation. It's already in a recession. Hiking further would cause a depression. So that's why I think they will not allow depression to take place, much less a recession, and therefore the central banks will do a U-turn in policy. And if they don't do that, there'll be depression and more people would lose their job. Right now, okay, very interestingly, the non-farm payrolls came out with a job gain of 300 over 1,000 jobs. But for one who actually dwells deeper, the job gains was actually due to people holding multiple jobs. But there were actually a fall in part-timers. There was actually a fall in the full-time workers. But there is a huge rise in multiple job holders. But the employment report like to measure it such that one job is equal to one employed person. So that's why when one person holds two jobs, it sees it at 2% being employed. That's why the unemployment rate is still seen as very low. But actually, a lot of people are holding 2 or even 3 jobs because they even have to work part-time during the weekends because the consumers have no more money because of inflation. They have to survive, meeting life ends meet is their priority. And that means giving up their own precious time to find jobs to feed the family. And those who have,
this is actually in line with the future trend because the future era that we are entering into is fire period. So fire will burn non-stop. Then people, will work like non-stop also already.
Yeah. So that is why the central banks will do a U-turn. Now, once they do a U-turn, inflation will worsen. Inflation will crimp productivity as corporations worry about costs, and also they will crimp they will also crimp productivity because consumption will be less due to inflation. So when inflation consumption is less, corporations will have less incentive to invest in plant and equipment to improve productivity. So that's why it will be a period of low output. Now, the fellowship thing, this year we are seeing the rise of the BRICS plus nations. They are now proposing to have a BRICS reserve currency backed by BRICS nation currencies. And on top of that, Russia and China is working with the Europe, EAEU or Eurasian Economic Union, okay, to come up with a commodities-backed currency, which I think eventually will be merged with the BRICS monetary system. And that is not the end of it, okay? A lot of countries in Africa, Middle East are applying, and South America is applying to join the BRICS nations, okay? For example, Iran and Argentina will soon be joining BRICS, and Hungary, Bangladesh, Uruguay, as well as UAE have become new members of the BRICS New Development Bank. So you can see that people are grouping together. Then on the security side or military side of the fellowship, we see the introduction of the Pacific, of the Blue Pacific, okay, of nations that want to involving US, UK, Australia, and New Zealand to protect the South Pacific, because suddenly China signs an agreement with Solomon Islands, have some agreement with Fiji, Papua New Guinea. So then, they are now going to build their own Blue Pacific nations. Of course, those islands, Pacific islands, have to listen to their dictator. Okay, so this is, now we are seeing emergence of all these blocks, and it will only complicate the global geopolitics, economy, and financial situation much worse. Okay, so that's all I have.
Yeah.
Questions and answers?
Yes,
you can type your question on the chat box.
Yeah, I think the fellowship thing is more like the Lord of the Rings, the fellowship of the Middle Kingdom.
So
okay.
It depends who is Sauron.
Yeah. So yeah. So any questions that we can help to answer?
You can
any one of you
in the chat box.
Let me check if the chat box has any questions or not. Participants have no questions.
Okay, when do I expect the Fed to do a U-turn? I think it depends on two very important factors here. Number one is how much pain can the US endure because recession is already in. And the last I read is that a lot of corporations in these earnings seasons are going to announce job cuts. So if the job cuts is very significant, unemployment claims goes up, and then there's adjustment to the employment report further down the road that will show unemployment ticking up, then the Fed mandate will be breached because it's to maximize employment, part of its mandate. But the Fed's other mandate is actually to ensure stable prices. So the Fed actually have to choose either one. It cannot do both. Now, the other thing is that the strength in the US dollar is creating a dollar liquidity problem, very similar to the 2019 repo crisis, where there is a shortage of US dollar in the market and no banks want to lend money to each other, causing the overnight repo rate to go as high as 10% for a single day of repo. So if this dollar liquidity crisis plus the recession risk and the Fed still continue to hike, then we will see a lot of banks facing financial stress, because outside of the US, where they have these trillions of debt and all those, in the euro dollar market, which means US dollar that are held outside of the US, there are 33 trillion in assets. Now, this 33 trillion of euro dollar are lent to emerging markets in exchange for the European banks holding their bonds. Now, if let's say US dollar spikes up, the emerging economies that borrow from the euro dollar market will have to pay a much higher debt service, because interest rate may remain the same, but then their currency has devalued against the US dollar. So what happened is then they will default on the bonds. If let's say they default on the bonds, then the euro dollar market, which consists of 33 trillion dollars, would actually be at risk. So once this is at risk, the globally systematically important banks, or the G-SIBs, will be in trouble, because as the value of the bonds decrease, then their assets that they hold will also decrease. So if assets decrease at a faster rate while their liabilities increase, then we could see the G-SIB at risk. And if let's say one G-SIB fall, all it needs is just one G-SIB, okay? One systematically important bank to collapse, then it will spread across the entire banking system, because they are all connected to each other via counterparty risk and through derivatives. So that is whether the Fed will allow that to happen. Because if they allow that to happen, which means US banks will also be put at risk, although US banks are actually in much stronger foundation versus the European banks. So I think all this we will know within months. Okay, no need to wait until next year, because a lot of economists are predicting, okay, there'll be inflation, then deflation, and then the economy can recover. No, it won't happen.
I don't think it will recover this year, because from even the Chinese astrology standpoint, productivity will definitely be low. That means the industries are not this one. So the employment rate is going to be quite high. And I don't think there is much of a U-turn. It doesn't look optimistic, at least for this second half of the year. The first half is still okay from the chart analysis, but the second half all gone, all this one. So with this knowledge also, I personally has also, exceed some of my position in the stocks itself, even before the second half comes in, with that knowledge I have.
Yeah. So David has a very interesting question. Now, I think that is why the central banks would actually have to buy up, okay, like Japan, yeah, they have to buy up the bonds, and ECB also have to buy up the bonds, okay. But one interesting thing is that there are signs now showing that some of the central banks' total equity is actually negative, because the bonds have all collapsed in value, okay. That so much so that their assets are now less than their liability. But central banks, they are not like a commercial bank, okay. The profit and loss, is is not the most important issue. But one thing that the central bank has is that they do carry gold reserves. One of the way which central banks can actually rebalance back their assets, okay, is to revalue gold to a much higher price to actually balance back their assets. Okay, the whole thing is that central banks, even though they are negative equity, it doesn't place them at a very, very huge risk because they can always recapitalize it, you know, back to money printing, or they can revalue the other asset that they hold, which is gold, into a much higher value, so that it helps to ease off, okay, a lot of the government debts and so forth. So the it's actually up to the central bank which direction they want to go. Okay, hope that answers your question.
Okay. Probably if there's a revalue in gold, it will happen sometime end of the year because there is some indication of it.
Yeah, I also hope so too. You know, but
yeah,
I think that the danger is that there are too many connected derivatives among all the banks, and some economists estimated that if we were to take into all the global debt, all the global derivatives, whether reported or unreported, and total unfunded liabilities, it comes to an astounding 2.5 quadrillion. Okay, 2.5 quadrillion is a huge amount of money. So a lot of times, banks themselves, they will say that, hey, it doesn't matter my derivative exposure because I have if this one goes up, okay, that one will come down, and you know, net off the amount is not great. Yes, it's true. Okay, because the financial derivatives can actually net off each other, and the loss may not be as big. It won't be a total 2.5 quadrillion loss. But the thing is, just like the repo crisis, when banks have no trust of the other, that means there's a failure in the netting off of financial derivatives. Okay, if let's say there's a failure when banks do not trust each other, then there's no netting off. People just would not trust each other, and that's when the counterparty risk will explode. Okay, so that is the danger. And a lot of the commercial banks actually underreported their financial derivatives, and most of them just put a net figure, okay, that is much smaller. But if banks started to distrust each other, then, you know, it will be a situation much worse than the lemon crisis, because lemon crisis was that all the commercial banks refused to trust lemon's creditworthiness. Okay.
Okay.
Any questions? So, David, does that answer your question? So far in Asia, I've not read about it. Okay, but in the US and the EU, Ivan's question is that the money we keep in the bank. But in the EU and in the US, there is a specific clause that spells out depositors will also be the creditors if a bank fails. Okay, which means the depositors' money will be used to bail out the bank. And then what they get will be the bank's shares in return. We have seen that in Cyprus, okay? And it happened in Cyprus during the European debt crisis. So, and it's already spelled out in the EU banks as well as in the US banks. But Malaysia banks, I've not read any article that touch on this. So, so far, you know, a lot of Malaysian banks, they say that up to a certain amount, okay, you are insured. Okay, so for those who are very rich, okay, you know, because the insured, I think is up to, don't know, 250,000 or something like that. So you better spread it up across multiple banks. because those above 250,000, whatever the difference, could wind up building the bank. But I think in Asia, the banks are less at risk, okay? Because when I look at the G6 here, most of the banks that are counterparty to each other are actually Europe, US, Japan, and China, okay? So these banks would be more at risk, okay? Because they, especially China, you know, the world top 10 banks in terms of asset quality, China actually has the most banks. So that is somewhat a risk factor, okay, when the counterparty risk starts failing. So I think that's why the China started to deflate the property bubble last year, so that it wants to prevent a potential collapse when other countries start collapsing.
Okay, if you really have the money and don't mind and you feel that really is not secure, I think Singapore will be a best place. Singapore banks are very secure.
Yeah,
from, you know, from the standpoint of the astrology in terms of, you know, in the region of growth and stability, Singapore's will be a place where you can keep some of your money, and I think the currency will also be quite stable.
Yeah, I think if you want to compare Singapore dollar with Malaysia, I think you know, a few times Singaporeans actually rush to exchange their money to Malaysian ringgit whenever they see a sharp fall. I think best to avoid it for the time being, because I saw the same thing, Singaporean rushing to exchange for ringgit when it was 2.88, then again when it was 2.10. Right now it's closer to 3.2. 3.1. Right now it's closer to 3.2. If we study the core relationship of the relationship between Sing dollar and Malaysia ringgit, going all the way back to before the, you know, I studied in Singapore up to graduation, and then I left Malaysia for Singapore. I left Singapore for Malaysia, returned back after I fulfilled my bond to serve in the to serve in the commercial sector for 3 years. At that time, when I was studying, the exchange rate was 1.2 ringgit to Sing dollar in 1985. But during that period, we have seen a period of recession. So when I left Singapore in 1993, it was 1.5. Then subsequently, we have the Asia financial crisis, which saw the exchange rate from ringgit to Singapore dollar becomes 2.2. Then we have the dot-com bubble, and then we saw it rising to 2.3. And after that, we have the global financial crisis. We see it touching about 2.4 to 2.5. So right now, after the pandemic, it's 3.1 to 3.2. So every time after a recession, Malaysia ringgit will actually fall further behind Singapore dollar. So if, let's say, if you are a Singaporean, you know, I think the Sing dollar commands a lot of respect, and also because you know, people, you know, like Malaysia like to say, hey, you know, our debt to GDP, government debt to GDP is, you know, 65%, but actually foreign analysts put it at 73% because of governments being guarantor for GLCs in Malaysia. Okay, but then they say compared to Singapore government debt to GDP is more than 100%. But actually, the Singapore reserve to GDP is very much higher than Malaysia. Okay, and because Singapore government managed the Sing dollar such that when economy is inflationary, they allow the Sing dollar to appreciate. That's why you see Sing dollar appreciating so much. Instead of keep on raising interest rate, because the Singapore government will not do that, because a lot of the people use their income and CPF to buy property. And if, let's say, they increase the interest rate, then a lot of the citizens would really feel the pinch. So they allow the Sing dollar to appreciate so that the inflation pressure is kept low. When the economy is in the doldrums, they allow the Sing dollar to weaken so that it's, you know, help to support the economy. So in that sense, it has lesser to do with interest rate. So that is why I think Singapore dollar does command a lot of respect. And I think if you hold on to it, you for longer term, you might be able to exchange much better, whenever you want to travel overseas and such. Yeah. So next question. Does it mean that the amount of government or central banks debt is not too concerning as long as they continue to issue bonds to pay for their expenses? When will Greece actually goes into insolvency like Sri Lanka without anyone willing to bail it out? Well, I think the ECB is willing to bail out all the PIGS nation, okay, which means Portugal, Ireland, Italy, Greece, and Spain, because they are the weakest. ECB already shown their commitment to bail it out, okay? And central bank will continue to print. They would rather save the economy than the inflation, okay? Why? Because if the economy continues to suffer, the central banks will all lose their jobs, okay? The people will force the government to kick out the central bank. And central bank is actually a private entity, okay? And if you Google the Rothschilds central bank, it's like all the central banks in the world is tied to the Rothschilds family, okay? So it's a long history. If you want to study, you can go to YouTube, and listen to the story about the Rothschilds, how they started from a bank in Germany. Then
maybe from Middle Ages could be.
Yeah, it dates back very long. In fact, during the Napoleonic War, the Rothschild Bank in France is supporting the Rothschild, the Napoleon, while the Rothschild Bank in England was supporting Duke of Wellington. So at the end of the day, they know what's happening, okay? Then they bet on the losing side. Against the losing side, a bet on the winning side. So that's how they make money. And in fact, Nathaniel Rothschild, I think, did say, I care not who is the government as long as I have the power to print the money, something like that. Okay, so that's why the central bank would want to ensure at least there's a reason for them to continue being there, and that's why they would rather hyperinflate than to destroy the economy, because then their existence will be challenged. Okay, so that's why I think they will continue to do so. So next question, is commodity bull run super cycle still intact? Okay, I think recently there's one, for those who actually follow the cryptocurrency market, you might have heard of one economist called Raoul Pal. Raoul Pal is in one of his interview actually mentioned he's buying US treasuries because for short term definitely, or not so short term, short to medium term, because he's saying that the Fed will pivot, and when they pivot, treasury would rise, and the Fed will have to do even a much higher QE, okay, to actually do a much higher QE to sustain the spending, and that's when treasury will continue to appreciate, and that would give him time to actually buy now, sell later, then sweep all, sell off the treasury to invest in all the beaten down stocks. So that, and also in some cryptos, which we think has fallen in tandem with the NASDAQ. So if the Fed pivots, then NASDAQ will actually reverse to the upside, and that is when cryptocurrency would likely follow the same trade, because the trend between the NASDAQ and the cryptocurrency market, both have also declined. So that goes to show that cryptocurrencies have not yet fulfilled the inspiration of being a digital gold as yet. Yeah. So in that sense, I think once the Fed pivot, there will be a super bull run, okay, in commodity cycle, in the commodity sphere, because once it's pivot, US dollar will come down. And this time, because of the recession is going to be much worse. Even during the pandemic, consumer sentiment have not reached a record low. Right now, it has reached a record low. Not only that, small businesses are reaching a record low. Okay, and as I mentioned, the cancellation of pending home sales, has spiked up to, in the last few years, just second only to the pandemic. And if let's say it goes higher because of higher interest rate, then definitely it's going to be a much worse situation than the pandemic. So US inflation will be peaked by year end. A lot of people were saying this, but like I say, during the 1970s, Fed hike interest rate, inflation came down, then there's a recession, they ease, and then inflation shot up much higher. So if you follow, in fact, the inflation in US is being manipulated. Few things that is not being discussed, okay? First and foremost is that the BLS actually changed the criteria for housing. Last time they used housing as an as a form of inflation, but housing has already gained so many hundreds of percent all through the years, so they would rather not. So they use their own modeling of using rent instead. So every time they use rent, they try to keep it down, okay, by putting a hypothetical figure. They put rent at about, I think the last time it showed about 6%, but at the same time, according to the Zumper rental chart, it shows that within 1 year rental has actually gone up between 11 to 12%. But in the BLS, it put rental inflation at 6%. So it's actually reducing it. Why? Because the Federal Reserve core CPI, rent as a percentage of the core CPI is 40%. So if they allow that double digit to be in, the core CPI would shoot up. So the Fed would often weigh the GDP, the real GDP growth, by netting off against the core CPI. Lower the core CPI, higher the GDP. So that is how they want to manipulate it, so that GDP looks better. The net GDP, the real GDP looks better by controlling inflation. And another thing is that automobiles, for many years, they have not allowed automobile to show any inflation, because the Fed says that, hey, the inflation, there's no inflation in automobiles. Why? Because now every car got aircon, have heater, have audio. Previously, they don't have. So they equate with higher price due to improved quality, and therefore there's no inflation. And another thing that the Fed never take into account is shrinkflation, because what happened over the last 2 years is that retailers found out that if they keep on increasing price, it will actually affect their revenue, because people refuse to pay. So what they do, they shrink the size down by 20%, so that people have to pay double to feed the family. Okay, instead of previously they buy 1 packet, now they have to buy 2 packets to help offset their to help match back their consumption. So this inflation did not take into account any shrinkflation. And the other incentive for the Fed to keep the inflation low is because Social Security. Now, if inflation is high, the Fed need to adjust the Social Security payment in accordance to the inflation. But if, let's say, inflation is kept low, that adjustment is smaller. And we all know that the US has no money, because all Social Security payment has to be financed by debt. And that is why there's every incentive for the Fed to manipulate the CPI and core CPI. Now, if you want to go back to check, were the Fed to continue using the same metrics that in 1980 was used when inflation was 13%, you go to shadowstats.com. Okay, John Williams there would tell you how inflation have changed and what is the real inflation is. If we use back the same metrics of 1980, inflation right now is at 15 to 18%. So that's why by changing the metrics, the Fed has, saying
the method of measurement.
Yeah, it's 8.6%, but actual fact is about 15 to 18%. So that's why I think inflation has more room to go, because you are talking about 30 trillion being, expanded into the monetary system. and that 30 trillion has still to be played out, okay, in a global inflationary crisis. So several experts speculate that S&P can drop as much as 50% from the peak. What is your view? Yes, I think, I've read about Michael Burry's works. He said that we are only halfway there, and just yesterday I saw another economist predicting we are also halfway there. Now, what the market has not priced in yet, right now the market is pricing in that every piece of bad news is good news, because it means that the Fed cannot raise interest rate higher, and therefore they have to pivot, and therefore the stock market will recover. But one thing they have not taken into consideration is earning recession. Now, what do I mean by earning recession? The strong US dollar will cause a massive earning recession in US multinationals, because weakening foreign currencies against the US dollar, when reported back in US dollar, in their earnings, it will show a decline. Especially if, let's say, we talk about ringgit maybe have depreciated almost 10% versus the US dollar, then this kind of thing is translated into the US dollar. You will see that decline, okay, in terms of earnings in US dollar. And once they price in the earnings recession, then the S&P would take a further step down. Now, if let's say the Fed this month decides to put in 0.75% in interest rate increase, then the S&P would likely take another leg down, okay? And at 0.75%, you will see probably a lot of default hitting the US corporation, because a lot of them, as early as the start of 2021, more than 50% of US corporation debt are considered junk. BlackRock actually did a calculation, okay? If I remember correctly, it was 56% at the start of 2021. 56% of US corporation debt is actually junk. Right now, with much higher yield, I can tell you it's definitely more than 56%. So if let's say we add another 0.75%, a lot of the US corporations will go into default. And when there is a default, it poses a risk to the banking system. Suddenly, what if 80% of the US corporations tend to default? And if let's say they do not default, assuming because of that high interest rate, their earnings is being impacted not only through a much higher exchange rate, a much weaker foreign currency converted to US dollar, lower earnings, but also higher interest being paid to refinance debt, which were borrowed at low interest rate. So that means that, earning recession is not only one effect, it's a double effect, okay? So if that happens, okay, then the measurement of the PE for the S&P would drop, okay? And if let's say corporations really will default, it will drop further. So that is the rationale behind why economists predict that we are nowhere near the bottom yet. Goldman Sachs, I think 2 months ago, or just last month, put the target at 3150 for the S&P before they see something that will force the Fed to pivot. So far, the S&P has dropped about halfway through, okay? And that means that we have another 25% or so to go. But the danger is that when everything starts collapsing, it can go down by as much as 80%. And such thing had happened before. Now, during the Great Depression, the Dow Industrial actually fell 90%. So next question, time to buy China tech stocks while having...
okay, I would like to add a little bit about this. As stated, from the astrology standpoint, so the worst has yet to come. So we are really confirm your prediction that we are just halfway through. And plus, we say that this year no productivity low. That means a lot of corporation will have problem already. Once where they get a profit from is from productivity, right? So it will eat into their profits also.
Yeah, time to buy China tech stocks while pending US recession. I think China has still not got rid itself as being independent from what is happening in the US. And Chinese tech stocks are showing, they are showing much better resilience, okay, compared to the to some of the tech stocks. Now the other thing is that China just injected, I think, more than 1 trillion renminbi into the economy, okay, and that would help provide at least some support. But the thing is that Chinese tech stocks right now is also burdened by one very important thing, the shortage of chips. That is why a lot of the chip makers and such, they are, for example, those in the gadget industry, they are facing pressure because they have the demand, but there's not enough chips. And furthermore, US is trying to put more pressure on the Chinese tech sector by saying that they will even, force Netherlands to stop, to disallow ASML to sell the DUV machine. First it was EUV, now they say they want to include DUV. Why? Because the Chinese technicians have successfully used DUV to improve the processors or the stacking to actually improve the chip's performance. So right now they want to include DUV. Now I think the part where China will finally break off is going to be over the next 2 years, okay? Because right now the only lithography machine maker in China is Shanghai Microelectronics. So far they have able to bring it down to 90 nanometer. They are now trying to get into 28 nanometer, and they still have not been able to be very successful in it. But I think given time, they might be able to reduce it to 28. Most of the technology that China, even AI and all this, 14 to 28 nanometer is enough, okay? And if, let's say, one thing that would level the playing ground is that when Russia secures Odessa, that means that Russia is going to be the one that controls the neon gas. And China is reported to be developing their own neon gas plant. Now, neon gas doesn't exist in the environment where you just harvest, okay? Neon gas can only be done when you have a gigantic steel mill. So China has a lot of this, okay? And there are reports that China is going to start up with their steel mills. The US, okay, and the Japan have already outsourced a lot of their steel production to China. So that means that they don't have that capacity to manufacture so much on their own. So if, let's say, Russia controls the neon gas through Ukraine and China is building their own, it becomes a stalemate. You don't sell me the DUV or the EUV, I won't supply to you any neon gas.
Yeah.
So that means that TSMC will be in trouble, NVIDIA will be in trouble, NVIDIA will be in trouble,
yes.
All these microchips producers will be in trouble.
That's why your stock drops.
Yeah, so that's why I was saying that even NVIDIA is a very good stock, but you should not go into it even though the value has fallen, because we need to see the outcome of whether Russia will take Odessa and hold it and negotiate to lift off sanction and allow the neon gas to be sold, because otherwise everyone doesn't have any chips, because the neon gas that is in the market is reported to last only about 12 months.
Yeah, another thing about China high-tech stock, actually for the past, I think 5 to 10 years, the Chinese government wants to develop the China technology ecosystem, what they call that, to be, to manufacture high-tech products like LCD. They have overtake Korean and Japanese to become the largest LCD suppliers, like Panda and BOE, but their technology still depends very much on Korean and Japanese technology. And some of the IP properties of the chip making, I think China has not really mastered it. And also US is like, trying to stop China from advancing into this area.
Yeah.
because they're afraid that it will be something like the LCD type. Because I've been in the, I'm in the consumer electronics industries and the supply chain for over 30 years. So I know what is going on in China, and also, working very closely with China high-tech companies, even like batteries, BODC, CATL, and all these things.
Yeah, I think the thing is that if for one thing is that China is going to have is already revising all their EVs rules. Okay, right now they want to open up more the EV, and they are going to continue subsidizing the EV until 2023. So that's why a lot of EV companies see a reversal, yeah, where sales actually increased by up to more than 100% in the month of June because of that change of policy. So I think beaten down Chinese EV stocks can be monitored, because I think no matter what, they still tend to follow the Nasdaq. Okay, even though their revenue may show improvement and such. So I think the period of accumulation should be on a gradual basis if you have confidence in the EV market, and because I think come 2025, okay, a lot of objectives would have been met. So there is also the talk that the development of graphene has yet to mature. Okay, I think although Huawei has patent to use graphene chips, but the challenging thing is that how to put that chip into the electronics themselves and ensure good performance, because right now it has only been tried as a capacitor in terms of resistors, if I'm not wrong, and it has not even gone into the proper chip making. So unless that could be changed, then if let's say China is Huawei, able to change the fate of the Chinese chips industry by pushing forward its graphene tech, then China doesn't need any DUV, doesn't need any EUV, okay, because graphene would totally revolutionize the industry, and then China has the world's largest reserve of graphene.
Yes, and also another thing is that there should be a breakthrough in the design of the printed board circuitry, because right now all the printed board circuits are designed around the silicon chips functions and how the algorithm.
Yeah. So that is how China can break away, because if China is able to break away with a new tech, I think China would not be interested in compete. That's why China is not even concerned when they want to achieve 2 nanometer, because there's this thing called the Moore's law, where the more you shrink it, okay, the less efficient it becomes, okay, because of the heat generating, because you are putting so many circuits in a small chip.
Micro circuits.
The heat that is generated will actually make the performance of that gadget very deficient.
Yeah. And also the yield of the manufacturing will be very low already, because when you handle so many micro circuits in a manufacturing environment, in this manufacturing environment, it will be very, very challenging.
Then I read a paper from 2 professors who are actually from Europe, if I'm not wrong, that they say that with the introduction of supercomputer or quantum computer, eventually, and also the improvement in quantum communication or even 6G, okay, we can actually transfer the performance of a smartphone from having to do so much processing that processing can be done by a supercomputer. And because of 6G or quantum communication, the release of the data will be very seamless. Okay, so they have come up with that theory. So that is shifting the processing power of a smartphone, where you require a very, very high performance chip, back to the supercomputer, which can actually function much faster. Okay, and then through 6G or quantum communication, release that data back to the phone very, very fast. So that's one way also to bypass, needing very, very efficient chips. So those professors have brought about this theory. So whether it will work or not, we do not know. But I think that is why I think China is moving towards quantum communication. They already sent up a quantum satellite. They have also China has also issued out already started on 6G, and it's 100 times faster than 5G. Okay.
Yeah. Okay. So to buy high-tech China stocks will very much depend on this factor already. This development has to be closely monitor in order to know that. I think these two are very closely related. I think we should answer the last question from Ivan Tan, and then we'll call it a day, and we'll talk. Then maybe we can talk to our participant about joining us on our next upcoming talks.
Sure. So commodity price will fall further. Yes, if the Fed continue to hike, stronger US dollar will also show a further deterioration in the price. Okay, but I think in terms of palm oil and gold, here's my opinion. There is a global food crisis. No matter how we see it, okay, there is not enough food for the whole world, and palm oil will strengthen when suddenly every country becomes very defensive, okay, that they want to stock up their own edible oils and such. So if let's say there's a shortage, then the price of palm oil would likely go up. I think gold has been under attack because the central banks wants to own gold, and that's why they're using the COMEX to manipulate the price lower. Okay, and if let's say why, you have to ask yourself why the central banks want to own gold. Why are they manipulating it lower? Because they do not want investors to own gold. Once they own as much gold as possible, when they do that monetary reset using gold to recapitalize the central banks, that recapitalize the economy, then common people will have no access to gold. It will become too expensive already. So right now, there is a severe shortage in gold. It's just that they do not want people to fight for the physical gold, because China is world #1 gold producer, Russia is #2. Both are not selling their gold. Okay, that means there is a shortage, and central banks are actually lapping it all up. And there's a report from Alistair McLeod that reported more than 8 million ounces of gold has been deported from the Bank of England. That means that smart officers, which means the family fortune companies, those that they inherit, the wealth that they inherit from their ancestors, family offices, and also the central banks, they are moving the gold out of Bank of England. Why? Because when there's not enough gold, suddenly Bank of England doesn't want to allow the removal of gold from their vault because they want to bail out their own Bank of England. They want to bail out the whole UK economy. Then you will have no access to your gold. So that's why people are rushing in to repatriate the gold out of New York as well as from the Bank of England. This is telling you that the very super elite wealthy families and central banks, they know what is up. So the only way they do not want common people to fight with them to have gold is to bring the price down so that you have loss of confidence in gold. But if you look at it, how gold has performed, okay, gold has fallen maybe about more than 10%, but the S&P has fallen more than 25%, okay? So that goes to show that gold is still a good store value, okay, versus Bitcoin. Bitcoin has fallen about 68% since its peak. So this is the reason why if you think that you need a good store of value or as a form of insurance, whether it's a form of a reset or falling a financial reset and all those, then I think gold and silver, physical gold and silver would be the best store of value. Okay, so maybe we'll meet with each other again in the coming series.
Okay, yeah, and also do follow us on our YouTube channel, which I put the link here, and also the Facebook link of PC's page in the Facebook itself. One thing about gold is that it's always an evergreen commodity to keep. Okay, no matter what time they are, which era you are in. Okay, yeah, I think we will have a next talk in end of this month, which is 27th of July. Do join us. It's also on Wednesday, 11 a.m., which we will talk about what the August brings. Because August from the chart, the astrology chart itself, brings a very challenging times. It shows that, the clash in August bringing about potential global reset at this point of the time. This is why I say the worst has yet to come. We do watch out for us there, and we also will send out, communication flyers on this talk and also the registration link for the upcoming talk. Thank you. Thank you for attending the talk.
Okay, thank you. Bye-bye.